let's stay on top of the financial markets, starting with the stock market, which we noted is opening the year strong after that big surge last year. Now, there's been a lot of talk over the past 12 months about how much of the credit for that goes to the U.S. president, whether there's a Trump effect. And now the New York Times, which is no fan of Donald Trump, has given him credit. Indeed, as we saw from his tweets today. But New York Times giving Donald Trump credit for companies using their cash to reinvest in response to Trump's cutbacks in regulation. So let's take a look at whether there is a Trump effect on the economy, especially markets, with our economy correspondent, Asher Westropp-Evans. Asher, let's take a look now, first of all, at the stock market as it's done over the past year, and then a little look forward.
Exactly right, Kalev. So taking a look at the stock market and what's happened over the 2016 period, we see it started the year at around hovering a little bit under 20,000, the Dow, and ended the year and started this year off or just under 25,000. I mean, this is a huge jump over the period of a year and part of a great trend in stocks heading up. Now, as you said before, this confidence in business has been attested to Trump and maybe to this sort of Trump effect.
Okay. Well, let's bring into the conversation from New York financial journalist Andrea Murat. Andrea, New York Times, no fan of Donald Trump, as we say, but giving him credit in an article today for companies reinvesting in a business. So is there a Trump effect on the markets that's going to carry on into the coming year?
I do think that there's a little bit of a Trump effect, but it may not be for the reasons that we assume them to be. So, yes, there's a lot less regulation, which companies do like because there's a lot less capital expenditures that they have to make to meet those regulations. But at the same time, there's also a huge tax cut that they've just received from Congress and from the government. And I do believe that shareholders are expecting to get some of that money back. And a few companies have already announced that they're going to use the excess money from the tax cut to buy back shares and return that money to investors.
Andrea, I'm curious, what do you think matters more, whether the optimism about the markets is actually justified or just having optimism there?
Well, I think that there's a lot of optimism because there is a lot of business opportunity, and we can expect to see some capital investment. But I do think that, you know, the market's going up because finally Trump does have a legislative win in that they did pass a tax bill, but the tax bill is untested, and we're not really sure what the effects of that will be. And there's also a lot less regulation, which is creating a lot of optimism for businesses because there's a lot less red tape that they have to go through, and they don't have to meet those same restrictions that they had to do in the past. With that said, though, there is a push by investors also for companies to be more sustainable, and even though there are a lot less regulations, they still may end up complying with those same things that they did before everything was rolled back.
Well, let's stay in the markets now, but let's turn to the commodities market, especially to oil and crude oil, and we've seen that almost double the past year. But concern now about what's happening in Iran, which is still one of the major oil producers. And Asher, this could have some kind of impact, certainly, on oil looking forward.
Absolutely. And having a look at oil over the sort of past few years, we saw that back in sort of 2013, it was peaking over $100 a barrel, had that massive decline at the end of 2015 into 2016, getting down lows of $29. You know, and they're now sitting back more comfortably at around $60 a barrel. Now, these prices, you know, they seem to be back on an upward trend, and it's likely to see more. I mean, with Iran, the third largest oil producer in OPEC, currently facing this unrest, and, you know, Iran also a massive pipeline area, access point for a lot of different oil networks, it's likely to see a pushback against, you know, in rise in the oil prices.
Andrea, what do you think? Where is oil going to go? It's ironic because really that drop in oil prices, which was at one point well over $100 a barrel, that drop down has hurt the Iranian economy. Is it now possible what's happening in Iran could drive that price back up?
Well, I think that there are a lot of other issues in Iran with regards to the price of oil. The country is pretty much, in many ways, cut off from the rest of the world in that you can't bring money in and out of the country, you can't go in and out of the country, and it's hard for Iran to participate in the global economy. So yes, they're very reliant on the price of oil, but will that have an effect on the price of oil, and will that price go up because there's unrest in Iran? That's really difficult to say. I think there's a lot of other factors at play with that.
Asher, let's talk gold for a minute. We've seen a weakening dollar and really strong gold. Do we expect that to continue in 2018, especially with the backdrop of this conversation of all that optimism about the U.S. economy?
Look, and usually you see a shift when it comes to gold, and we can take a look at some of the prices that have fluctuated and fluctuations in gold we've seen over the years. And in just this last year, we've seen massive fluctuations, but an overall general trend towards increased gold prices. Heading up now towards the $1,300 US dollars an ounce mark, and it tends to be a balance either way. Usually, when stocks go up, gold goes down, because gold is seen as a safe haven investment for people in troubled times. And while there is optimism that abounds, at the same time, people are wary of potential geopolitical pitfalls that could mean a potential crash in the future, difficulties in the future, and they seem to still be relying on gold.
Well, Andrew, as Asher points out, usually when stocks are strong or equities, you see the value of gold go down. Here we've seen both rise in tandem. Is that perhaps express an underlying uncertainty in the markets about maybe the geopolitical situation or the political situation, despite the fact that the stock market is booming?
Well, sometimes today, in these days, the price of gold does move in lockstep with the market. But yes, the price of gold is going up because even though there's been some political wins or legislative wins, like I've said, and at the same time, there's also a lot of political instability, and people are moving their money out of dollars and out of other currencies and into gold because gold is still the traditional safe haven asset, and they want a place to keep their money where they don't feel like it's going to be at risk. The price of gold doesn't always move down quite as much as markets do. If there's some type of unrest in the world and tensions get a little bit more heated, we could see a correction in the market because of that. And there's just a lot of different reasons why we could see the market go down, whether it's a potential war or what happens with the Mueller investigation and the Russian probe. I think that that creates a lot of political uncertainty, and people just want to put their money out of dollars and into something that's a little bit safer.
All right, Andrea Murad in New York, thanks very much for being with us. Our Asher Westropp-Evans, great to have you as always. A little bit of a forecast for the year ahead, but the bottom line still seems to be uncertainty, something we hear a lot of.